Welcome to Chained Opinion. We saw some pretty dramatic movements in the markets yesterday, March 10th, 2025.
Yeah.
And in this examination, we're going to try to figure out what happened, what caused it, what are the implications, and all that kind of stuff. A bunch of interesting stories kind of came together yesterday
Right.
to really illustrate some investor unease and quite a bit of volatility in the market.
Yeah. It was a day of really big moves across all the major indices. And I think it really does seem to be a culmination of different things that we've seen over the last couple of weeks.
Let's get into it.
Yeah.
So the big headline is obviously this plunge in the stock market.
Yeah.
Major U.S. stock indexes took a pretty big hit.
Yeah.
For those who might not be, following this as closely, can you just give a quick explanation of what these indices are that we always hear about, like the Dow, the S&P 500, the Nasdaq, and why they are such important indicators of how the market's doing?
Yeah. So, think about these indices as like a basket of different companies and different stocks. So like the DowJones Industrial Average that tracks 30 large publicly owned companies that are based in the United States. The S&P 500 represents 500 of the largest companies in the U.S. economy. It's a little bit broader snapshot of the market.
Right.
And then the Nasdaq Composite, that one is really heavily weighted towards technology companies.
Right.
So when you see these indices move a lot like they did yesterday,
Yeah.
it signals a pretty broad shift in investor sentiment in the market.
Okay.
Or a perceived value of these companies in these parts of the economy. So yesterday, all three of them experienced substantial drops. The Dow Jones Industrial Average fell 890 points, which is 2.1%, to close at 41,912.
Wow. I mean, when you hear the Dow drop,
Right.
that gets people's attention.
Right.
The S&P 500 also had a really rough day yesterday.
Yeah, the S&P 500 slid 2.7%, or 187 points, to finish at 5,615. And that was actually its worst day of the year so far. So again, anytime you see a drop like that, it's really showing widespread selling pressure across a large portion of the market.
Worst day of the year so far for the S&P 500.
Right.
That's meaningful. And then the Nasdaq Composite, I mean, I know the Nasdaq has been really strong lately, but that got hit even harder.
Right. Yeah, the Nasdaq Composite had a particularly sharp decline, falling 4%, or 728 points. It's worth noting that the Nasdaq actually had already entered what's called correction territory, which is when it drops 10% or more from its recent peak.
Right.
So it had done that the week before. So this really kind of amplifies those concerns and suggests, a deeper shift in the outlook for the tech sector. So with all the selling pressure, it was pretty widespread. The U.S. stock market actually shed over $1.7 trillion in value in one day.
That's an incredible number, 1.7 trillion. It's hard to even fathom a number that large.
Right.
And I believe that the S&P 500 and the Nasdaq actually hit levels that we haven't seen in a while.
Yeah. So both the S&P 500 and the Nasdaq 100, they reached their lowest levels that we've seen since September of 2022.
Wow.
And in fact, this is a part of a larger trend because this drop yesterday contributed to the S&P 500's worst six-day stretch since September 2022 as well, with a decline of 5.7% during those 6 trading days. So it was a very, difficult day for the markets.
Yeah.
The S&P 500's drop yesterday of 2.7% was the biggest that we've seen since December of last year. So it really was a combination of negative performance for the markets yesterday.
Yeah, a lot of bad news coming together at once. So what were the big things that kind of came together to cause this downturn? Because it does seem like there were several different things that were kind of pushing in the same direction.
Yeah, I think a key trigger here seems to have been the remarks that President Trump made over the weekend regarding the potential for a recession. And I think this really kind of fueled anxieties in the market that were already there.
Right. There was an interview on Fox News, I think, where he talked about this. So what exactly did he say that caused this kind of a reaction?
Yeah. So in a Fox News interview that aired on Sunday, the president was asked about the possibility of a recession.
Mm-hmm.
And instead of explicitly ruling it out, he said that the economy would experience a period of transition as a result of his policies.
Right.
He also mentioned that he wants to bring wealth back to America, acknowledging that it would take time. But that kind of ambiguity, especially from somebody who, has an impact on economic policy, can really inject a lot of uncertainty into the markets.
I mean, it's a pretty ambiguous statement, particularly given where we are in the economy. And I know there was also sort of a different view expressed by someone in the administration around the same time. Did that sort of mixed messaging from leadership contribute to the anxiety here?
Yeah, that's a really good point because Commerce Secretary Howard Lutnick actually stated publicly on Sunday that there was no chance of a recession. So that kind of contradiction really amplifies these concerns
Yeah.
for analysts and investors because it really just shows this mixed messaging coming from the administration. And I think when the president himself doesn't explicitly rule out a recession, it does make people wonder what he's seeing that they're not.
Yeah. You have these two high-level officials saying basically completely opposite things.
Right.
And so what are investors supposed to make of that? And then the other big factor here, it seems like, is the president's trade policies,
Yeah.
particularly these tariffs.
Yeah.
How did that contribute to yesterday's market turbulence?
Mm.
And for those who might not be following every little detail about tariffs, could you just explain quickly what they are and how they typically impact the economy?
Right. So tariffs are essentially taxes on goods imported from other countries. The idea, in theory, is to protect domestic industries by making those imported goods more expensive.
Right.
However, this can also lead to other countries enacting retaliatory tariffs, and you can see prices increase for businesses and consumers, which can hinder economic growth. So a good example of this is China began implementing retaliatory tariffs yesterday on American farm products. So this was a 15% levy on things like chicken, wheat, and corn, and a 10% tax on soybeans, pork, beef, and fruit.
Wow.
So that's really going to be a big hit to American farmers.
Yeah.
And you can see kind of ripple effects throughout the agricultural sector.
Yeah.
And it wasn't just China. Ontario, Canada announced a 25% surcharge on electricity exports to the U.S.
Oh, wow.
as a response to the U.S. tariffs that have been imposed on Canadian products. So all this just kind of adds to those concerns about slowing economic growth.
Right.
And this potential damage from what some are calling a destructive pro-tariff agenda, you can see how these trade disputes start to escalate
Yeah.
and impact a bunch of different sectors. It's not just the goods themselves.
Right. It's not just a tit for tat on wheat or something like that. These things can ripple out in ways that are hard to even predict, I would imagine.
Yeah.
And it sounds like it's not just, everyday people who are concerned about this. We're seeing analysts actually adjust their economic forecasts as a result of what's happening.
Yeah. So Goldman Sachs, for example, downgraded its 2025 U.S. economic growth forecast from 2.4% to 1.7%.
Wow.
So pretty big drop. And they explicitly said that this was because of headwinds that they expect from the Trump administration's trade policies. They are now expecting a rise in the average U.S. tariff rate. So that downward revision shows, that there's this real potential for these policies to dampen economic activity. And then beyond that, you have this kind of on-again, off-again nature of the tariff announcements, which really creates this total uncertainty in the market. Businesses can't plan investments.
Yeah.
They can't plan their supply chains.
It just creates so much volatility.
Right, exactly.
If you don't know what the rules are going to be in 3 months or 6 months, how can you possibly make these kind of long-term plans? So moving beyond just sort of the broad market trends, we did see some pretty significant movements yesterday in individual company stocks. Apple, for instance, saw a pretty big drop despite the fact that they've been releasing all these new products. What was behind that? Because it seems kind of counterintuitive that positive news wouldn't actually lift the stock price.
Yeah, so Apple's stock plunged 5%, despite the fact that they did just announce a bunch of new products, including a new iPhone, refreshed iPads, and new MacBooks. So you'd think that that would be good for their stock. But I think the reason for this decline is this investor skepticism about the accelerated release schedule.
Interesting.
A lot of questions about, when the revenue is going to come in from these. Will it be immediate or will it be spread out? There are also concerns about market saturation potentially, or even if this rapid rollout of new products is going to dilute the impact of each individual launch.
Yeah. So I guess even with seemingly positive news, like new products being released, if the overall market sentiment is negative, they can still kind of drag things down.
Yeah, right. Exactly.
And then Tesla had a particularly rough day, like really a dramatic drop in their share price.
Yeah, Tesla's shares fell over 15%, which was actually the biggest drop since September of 2020. So overall, the stock is down more than 41% for the year, and its market cap has been cut in half since December. So there are a number of things that are kind of feeding into this negative outlook for Tesla. Obviously, there are the broader recession concerns.
Right.
The uncertainty around tariffs, because these things could impact demand for large purchases like cars.
Especially, more luxury cars like Teslas.
Right. Exactly. But then you also have CEO Elon Musk's advisory role with the Trump administration. Some are saying that this is potentially a distraction from his leadership at Tesla, or that it might be a conflict of interest for some investors.
Right.
And to top it all off, UBS actually cut its forecast for Tesla's first quarter deliveries, which, indicates potential weakness in near-term sales.
So it's not just the macro stuff, it's some company-specific stuff going on with Tesla as well.
Right.
And it wasn't just those two big companies that were having a bad day. It seems like other major tech companies were seeing some losses as well.
Yeah, that's right. Other tech giants like Alphabet and NVIDIA each lost about 5%. NVIDIA in particular has now seen its stock drop more than 20% since the beginning of the year. So this is really showing you that this pullback in the tech sector is pretty broad.
Yeah.
And it's starting to impact even the most successful companies.
So beyond just tech, were there any other individual stock movements yesterday that you were paying attention to?
Yeah.
Especially in sectors that might tell us something about how consumers are feeling or what they might be doing.
Yeah, so cruise ship operator Carnival dropped 7.6%, and United Airlines lost 6.3%.
Interesting.
So this could be a sign that people are concerned about consumer confidence. If a recession does hit, people might be less likely to spend money on discretionary items like travel.
Right. Makes sense.
We also saw some interesting moves on the acquisition front. So Redfin stock jumped almost 68% after it was announced that they were being acquired by Rocket.
Oh.
But then conversely, Rocket stock actually sank over 15%.
Interesting.
And then similarly, ServiceNow's stock fell almost 8% when they announced they were acquiring MoveWorks. So, this is kind of typical when there are big acquisitions. The market doesn't always react the same way. Sometimes they view the acquired company more favorably than the acquirer.
Right.
So it's interesting to see how those shake out.
Yeah, that's really interesting how the market reacts to those things. And then finally, let's talk about just the general mood. What were market commentators saying about this sell-off? What was sort of the psychology behind these big market moves yesterday?
Yeah, so I think the consensus among analysts is that there's been a deterioration in investor psychology.
Okay.
And this kind of aggressive de-risking that's happening. So investors are pulling back from those riskier assets like stocks. They're looking for safer havens.
Right.
And, even before this downturn, there were already concerns about elevated valuations in the U.S. equity market, meaning stock prices were really high relative to company earnings.
Mm-hmm.
And also the fact that market returns had become so concentrated in just a few big tech companies.
Right.
So if those big companies stumble, the whole market's going to stumble.
Exactly.
So that makes the market inherently unstable.
Right. So it sounds like there's a lot of uncertainty out there.
Yeah.
A lot of people not really knowing what's going to happen next. What are people recommending investors do during this time?
Yeah, so generally the advice is don't panic.
Okay, good advice.
Don't make any rash decisions. Don't sell off all your stocks just because the market dropped yesterday.
Yeah.
It's really difficult to time the market.
Right.
And often if you try to do that, you end up just locking in your losses.
Yeah.
If you look at the historical data, the S&P 500 has always recovered from these downturns.
Right.
In the long term.
Yeah.
So, having a well-diversified portfolio is really key.
Yeah.
And particularly for younger investors who have a longer time horizon, the advice is often write it out. This is a buying opportunity. You can buy stocks at a lower price now.
Right.
And you have more time for the market to recover. It's interesting that, that typical correlation that you see between cryptocurrency and the stock market, we didn't really see that yesterday. Cryptocurrency prices also went down, so it's not acting as much of a hedge as some people thought it might.
Yeah, that's really interesting. You'd think that if people are really afraid and moving away from traditional stocks, they might move into something like cryptocurrency, but
Right.
it seems like there was a general feeling of fear across the board yesterday. So what are the big picture concerns right now?
So Wall Street is really grappling with how much economic pain the Trump administration is willing to tolerate to achieve its goals,
Right.
especially with these tariffs.
Yeah.
And some are saying that this is, a policy-induced slowdown that we're seeing. Some commentators are even calling this a bloodbath, because of the indecisiveness, confusion, and mixed messaging coming from the administration.
Yeah. It certainly seems like there's a lot of uncertainty and a lot of reasons for people to feel anxious right now.
Right.
So was there anything positive yesterday?
Yeah.
Any good news?
Yeah, it's not all doom and gloom. There are some analysts who are saying that the recession fears are overblown,
Okay.
that it's just a blip. They think that the second quarter could be really strong because of tax cuts that were implemented previously. And we also did see The classic flight to safety yesterday with Treasury bond yields falling as investors move to those safer assets.
So maybe some mixed signals there as well. Some people saying things are really bad. Some people saying this is just a temporary thing.
Right.
We'll have to see how things shake out, I guess.
Yeah, exactly. I think yesterday really highlighted that connection between economic policy, investor confidence, and how markets perform. With all this uncertainty around trade and this possibility of a slowdown, especially after the president's comments, it's just a really difficult time for investors.
Yeah, no doubt about it. Well, I hope this discussion has been helpful for our listeners in kind of making sense of what happened yesterday in the markets. This is obviously something that can impact all of us. So we encourage you to think about these developments, how they might affect your own financial outlook, your own decisions, and all of that. Thank you for joining us for this analysis. If you found this valuable, please share it with others. Subscribe to Chained Opinion for more deep dives like this one, and leave your comments. We always love to hear what you think. You can find Chained Opinion as an audio podcast on YouTube Music and Spotify, so check us out there. And we will, of course, continue to monitor all these economic factors and bring you the latest as they unfold.
Sounds good.
Thanks.